This week, Fed Chair Jay Powell did what he said he'd do. He said, we're going to taper a lot faster. We're going to get to the possibility of rates sooner. Did he do enough?
I suspect in the end it won't have been enough. You know, what they're planning is 3.5% unemployment for 3 years with steadily decelerating inflation without the interest rate ever getting as high as what they think the neutral rate is. That could lead to sharply declining inflation, but it wouldn't be my expectation that that's what's going to happen. On the other hand, there's a case for making adjustments gradually, and it may be that this is the first stage in what will be several adjustments, and it needs to be recognized that the market doesn't even expect them to hike as much as they're saying that they're going to hike. So it's a complicated situation. I was glad to see the movement in the direction that they moved. But I think if you look under the surface, they're still kind of betting that inflation is heavily transitory because they're not really applying restraint to the economy of a magnitude that would be expected to diminish inflation in a very substantial way.
Well, let's talk about the transitory because we've talked to a couple of economists this week. Austin Goolsbee used to be White House economist. Cecilia Rice, whom you know well, current White House economist, who don't use the word transitory, but they say something close to that, saying, look, whether this affects inflation or not depends on the causes of it. And if the cause is really some supply chain problems, those are going to go away on their own. And therefore, we didn't need to do as much on monetary policy. What do you say to that?
Cece's a former student of mine and someone I respect greatly, but I don't see it quite the way she sees it. Here's what I see. I see shelter is 1/3 of the CPI. I see house prices going up 20%. I see every private sector rental index up in double digits. And I see the CPI calculated with long lags and only up 3 or 4%. So that says to me that we've got another 8 to 10% of shelter inflation coming in, weighted by 1/3. That's almost 3% right there in terms of a contribution to inflation. I see a red-hot labor market with labor shortages, with hourly wage rates accelerating, and ultimately, labor's the most important source of costs, and all the businesses I talk to and all the businesses where I read reports from stock analysts say they've got a lot of pricing power. So if you take housing and you take labor, and then you add to it, David, that the consensus forecast is for the economy, the Fed said, to grow something like 4% during 2022, and you take an economy that's growing 4%, with almost no productivity growth and a labor shortage, I think you're going to see new bottlenecks emerge, even as old bottlenecks are fading away. So it might turn out to be the case that they're right, but I don't think we can plan on it. And I am concerned that we've hidden the word transitory, but we haven't hidden the concept that inflation is going to solve itself. And I think that idea was wrong, and that's why I was encouraged when Secretary Yellen and Chairman Powell said they weren't going to use the word transitory anymore. But I think that idea is still very present, and my fear is that it's a problematic one, and my fear is that it's an idea that's going to do damage to policymakers' credibility. But no one knows, and this might work itself out in a reasonable way. Certainly, Omicron is a big wild card that could change everything. Whether it's going to do more to reduce demand than it does to reduce supply, in which case it would slow inflation, or whether it's going to do more to reduce supply than it does demand, in which case it would tend to increase inflation. I think that's very hard to judge at this point.
Well, since you raised Omicron, let's go to the virus question, which is another huge story this week, obviously. Where are we from your point of view? And by the way, do we know enough about this disease? Why, this far in, don't we know more about Omicron and what it does?
Look, the effort both in the United States and globally to have in place adequate testing capacity and adequate sequencing capacity, so at least at all moments we know what we're dealing with. We're still not there, and that's a real problem. And Omicron's not going to be the last Greek letter associated with COVID, and COVID's not going to be the last pandemic threat we face. And so it's a matter of super urgency that the world get itself organized for more satisfactory genetic surveillance so that we can answer some of these questions. Look, I think two things are clear. One is that this thing grows much faster exponentially than its predecessors. There are doubling times in many places of 2 or 3 days. The other is that it's likely, very likely, that it is less virulent. But, you know, if it doubles every 3 days and it's only a third as virulent, that means you're going to have more serious cases after a delay of 6 days than you would have with the other version. And so I'm worried that the combination of more rapid exponential growth and an arithmetic factor for better health improvement is going to leave us, at least for some interval, in a problematic place. And I'm struck, as I'm sure all your listeners are struck, David, by the fact that just in our ordinary lives, there's been an explosion in the last week of anecdotes we're hearing about people we know who have gotten COVID. And so I think this is going to be a pretty traumatic period we're going to go through over the next month or 6 weeks. And the experience has been that these things tend to end slower than people expect rather than to end faster than people expect. So I think from a broad social point of view, anxiety is unfortunately the right place to be.
Laurie, a big development that did not happen this week was the Build Back Better plan getting through Congress. We're going to go into next year on that. I wonder, though, is it possible that Joe Manchin, the senator from West Virginia, might have a point? Because you said in the past you think there's a lot that's good in that bill, but is it over-inclusive? For example, I'll pick one out, child tax credits, which came up at the end of the week as a big issue. If you look at it, getting children out of poverty, I think everyone has to agree with that, but the expansion of the child tax credit goes well past poverty.
I think it is possible, and I remain hopeful that Senator Manchin is going to have had an immensely positive impact on a bill that passes. For us to do nothing to extend in any form any kind of child credit, for us to substantially underinvest on green investments, for us to do nothing on either pre-K or child care, I think all of that would be very, very unfortunate and would set our economy back. But are there plenty of ways that this bill can be improved? Yes, there are. The budgeting can be made more straightforward over the 10 years so that we've got 10 years of expenditure in 10 years. There can be a greater focus on the cost effectiveness of the money that we spend rather than just on the allocation of money to key priorities. And there's certainly opportunities for revenue raising that should be taken advantage of, like carried interest, that somehow remain unaddressed in this bill.
And Larry, finally, let's wrap up the week just briefly here with Outrage of the Week. I understand you have one.
Yeah, I do. People in Congress who get information on legislation that affects the value of companies shouldn't be able to trade in those companies, period. I'm all for capitalism. I'm as much for capitalism as Speaker Pelosi is, but when she defended the current set of special interest, conflict of interest rules as capitalism, she was making one of her very rare mistakes.
Should we make them put it all in blind trust?
We should probably make them put it all in mutual funds and not trade in specific securities that could conceivably be objects of public policy. Blind trusts are a kind of unwieldy thing, but there's no reason why they can't do what most people think is the smart investment practice anyway, which is to put your money in various kinds of passive index funds.